China's economy is facing a major challenge. For decades, the country experienced remarkable growth. It became the world's second-largest economy, but now, that growth has slowed significantly. This slowdown has grabbed global attention. The reasons for this slowdown are complex and interconnected. They range from structural shifts in the economy to an aging population. Global uncertainties, a struggling real estate market, and government policies also play a role. Understanding these factors is crucial. They will determine China's future economic path, and they will have a significant impact on the global economy as well. The world is watching closely to see how China navigates these challenges. The outcome will have profound implications for us all. China's economic model was once heavily reliant on manufacturing and exports. Factories churned out goods for consumers around the world. This fueled rapid economic growth. However, this model is no longer sustainable. China's wages have risen. Global demand for cheap goods has slowed. China needs to transition to a new model. This new model focuses on domestic consumption and services. Instead of relying on exports, China aims to fuel growth by encouraging its own citizens to spend more. This transition is complex and will take time. It requires shifting resources and creating new industries. But it is essential for China's long-term economic health. China faces a demographic challenge that is unprecedented in its scale and speed. Decades of the one-child policy have led to a rapidly aging population. The number of working-age people is shrinking. Meanwhile, the number of retirees is growing rapidly. This puts a strain on the country's pension system and healthcare resources. An aging population also leads to slower economic growth. There are fewer young people to drive innovation and entrepreneurship. The workforce is less dynamic and adaptable. Addressing this demographic challenge is crucial for China's future. It requires reforms to the pension system and investments in healthcare. It also demands policies that encourage higher birth rates. China's economic slowdown is not happening in isolation. The global economy is also facing significant challenges. These global headwinds have exacerbated China's own problems. The trade war between the United States and China created uncertainty and disrupted global supply chains. Tariffs imposed by both countries hurt businesses and consumers. The COVID-19 pandemic further disrupted the global economy. Lockdowns and travel restrictions led to a sharp decline in global trade. China's manufacturing sector, heavily integrated into global supply chains, was hit hard. These global challenges have highlighted the interconnectedness of the world's economies. They have also underscored the need for cooperation and coordination to address shared problems. Section 5. The real estate bubble bursts. China's real estate sector has long been a source of both growth and concern. For years, the country has experienced an unprecedented construction boom, with new skyscrapers and residential complexes springing up at a breakneck pace. This rapid development has been fueled by massive investments and speculative buying, creating a property bubble in many urban areas. Years of rapid construction led to a property bubble in many cities. The skyline of major cities transformed almost overnight, with cranes and construction sites becoming a common sight. However, this relentless pace of building has not been without its consequences. Now, this bubble has begun to burst. Property prices have fallen, leaving many investors and homeowners in a precarious position. The once booming market is now facing a severe downturn, with empty apartment buildings and unsold properties becoming increasingly common. Several large real estate developers have defaulted on their debts. These defaults have sent shockwaves through the industry, leading to a loss of confidence among investors and further exacerbating the crisis. The financial stability of these companies is now in question, and their struggles are having a ripple effect throughout the economy. Construction activity has slowed sharply. Many projects have been halted mid-construction, leaving unfinished buildings and idle cranes as stark reminders of the sector's troubles. This slowdown is not only affecting the real estate market, but also the broader economy, as construction has been a major driver of growth. The real estate crisis poses a significant risk to China's financial system. The banking sector, which has heavily financed the property boom, is now facing substantial exposure to bad debts. The potential for widespread defaults is creating a sense of unease among financial institutions. Banks are heavily exposed to the sector. The loans and mortgages tied to real estate are now at risk of default, putting immense pressure on the financial system. The stability of these banks is crucial for the overall health of the economy, and their vulnerability is a major concern. A wave of defaults could trigger a broader financial crisis. The interconnected nature of the financial system means that problems in the real estate sector could quickly spread, leading to a cascade of failures and a potential economic collapse. The stakes are incredibly high, and the situation requires urgent attention. Addressing the real estate crisis requires careful policy management. The government is now faced with the challenge of stabilizing the market while avoiding further economic disruption. This involves implementing measures to support struggling developers and homeowners, as well as ensuring that financial institutions remain solvent. The government must balance the need to support the sector with the need to prevent a wider financial meltdown. This delicate balancing act will determine the future trajectory of China's economy and its ability to weather this storm. The coming months will be critical in shaping the outcome of this crisis. Section 6. Policy Uncertainty, a Chilling Effect. China's government has taken steps to address some of the economic challenges. However, some policies have created uncertainty and dampened investor confidence. For example, the government's crackdown on the technology sector has raised concerns about its commitment to innovation. New regulations have targeted data security and market dominance. These policies, while well-intentioned, have created uncertainty among businesses. Investors are hesitant to commit capital when the regulatory environment is unclear. To restore confidence, the government needs to provide greater clarity about its policy goals. It also needs to ensure that regulations are predictable and transparently implemented. Section 7. Domestic Implications, Unemployment and Social Unrest. China's economic slowdown has had tangible consequences for its citizens. Unemployment, particularly among young people, has risen. This is fueling social anxiety. The slowdown has also put pressure on local government finances. Many local governments are heavily indebted. They rely on land sales to generate revenue. With the real estate market struggling, local governments have less money to spend on public services. Social stability is a top priority for the Chinese government. It is acutely aware that economic hardship can lead to social unrest. The government is likely to prioritize policies aimed at creating jobs and maintaining social order. Section 8. Global Ripple Effects, Trade and Investment Slowdown. China's economic slowdown is being felt far beyond its borders. The ripple effects are touching every corner of the globe, impacting not just trade, but also investment flows and economic stability in various regions. As the world's second-largest economy, China plays a major role in global trade and investment. Its economic health is closely watched by policymakers, investors, and businesses worldwide. The slowdown in China's economy has reduced demand for commodities and manufactured goods from around the world. This decline in demand is causing a significant drop in global commodity prices, affecting countries that are major exporters of raw materials. This has hurt economies that rely heavily on exports to China. Countries in Africa, South America, and even parts of Asia are feeling the pinch as their export revenues dwindle. China's outbound investment has also slowed. This is particularly concerning for developing nations that have come to depend on Chinese capital for infrastructure projects and economic development. Chinese companies are investing less in overseas projects. This reduction in investment is leading to the stalling of numerous infrastructure projects, from roads and bridges to energy plants and telecommunications networks. This is having a knock-on effect on countries that have come to rely on Chinese investment. The slowdown is causing delays and cancellations of critical projects, which in turn is affecting local economies and employment rates. The global economy is adjusting to a period of slower growth in China. This adjustment is not just a short-term challenge, but could signify a longer-term shift in global economic dynamics. This requires businesses and policymakers to adapt to new realities and find new sources of growth. Innovation, diversification, and strategic partnerships will be key to navigating this new economic landscape. Section 9. Charting a new course, reforms and future outlook. China faces significant economic challenges, but it also has strengths. The country is at a critical juncture, balancing between maintaining growth and addressing deep-rooted issues. The rapid urbanization and industrialization have brought prosperity, but also new problems. It has a large and growing domestic market. This market is increasingly driven by a burgeoning middle class with rising disposable incomes. Consumer spending is becoming a key driver of economic growth, shifting the focus from export-led growth to domestic consumption. It has a skilled workforce and a strong tradition of innovation. Chinese companies are making significant strides in technology and manufacturing, positioning themselves as global leaders in various sectors, from electronics to green energy. The government has announced a range of measures to support the economy. These measures are designed to stabilize growth, create jobs, and ensure long-term sustainability. The leadership is keenly aware of the need to balance short-term stimulus with long-term reforms. These include increased infrastructure spending, tax cuts, and incentives for businesses to invest in new technologies. Infrastructure projects are not just about building roads and bridges, but also about enhancing digital infrastructure and connectivity, and efforts to boost domestic consumption. Policies are being implemented to encourage consumer spending, such as subsidies for household goods and support for the service sector, which is becoming increasingly important in the Chinese economy. However, long-term solutions require structural reforms. These reforms are essential to address systemic issues that could hinder future growth. The government is focusing on creating a more balanced and sustainable economic model. These reforms include strengthening the social safety net, addressing income inequality, and improving access to healthcare and education. By doing so, the government aims to create a more inclusive society where the benefits of growth are more evenly distributed, and creating a more predictable regulatory environment. A stable and transparent regulatory framework is crucial for attracting foreign investment and fostering innovation. The government is working to streamline regulations and reduce bureaucratic red tape. China's economic future remains uncertain. The global economic environment is volatile, and internal challenges such as debt levels and demographic changes add to the complexity. The path forward is fraught with uncertainties. The success of its reforms, the global economic environment, and its ability to manage internal challenges will all play a role. International trade relations and geopolitical dynamics will also significantly impact China's economic trajectory, and its ability to manage internal challenges will all play a role. The resilience and adaptability of its people, the effectiveness of its policies, and the strength of its institutions will determine the country's future. The world is watching closely as China charts its new course. The decisions made today will shape not only China's future, but also the global economic landscape for years to come.